Investing isn't just for Wall Street tycoons or seasoned financial gurus, it's a fundamental tool for everyone, including you, to shape a brighter financial future. It's about taking control and building a secure foundation for your dreams. If you're not investing, if your money is just sitting idle, you're missing out on the most powerful way to build wealth and achieve your long-term financial goals. You're essentially leaving money on the table. Your savings account is safe, it provides a sense of security, but inflation relentlessly eats away at its value every year, silently eroding your purchasing power. Investing puts your money to work, actively seeking opportunities for growth, growing faster than inflation and building your net worth through the magic of compounding. It's like planting a seed and watching it blossom into a fruitful tree. The earlier you start, even with small amounts, the more your money can grow exponentially over time. Every day you wait is lost potential, a missed opportunity to harness the power of compounding. Time is your greatest ally in the world of investing. You don't need a lot to begin. You don't need to be rich to start investing. Thanks to technology and the rise of user-friendly investment platforms, you can start with just a few dollars. The most important step is simply to start, to take that leap of faith, and begin your investment journey. No matter how small, every little bit counts and contributes to your future financial well-being. Consistency beats waiting for a big lump sum. Regular, smaller investments over time can often yield better results than trying to time the market. Not investing is the real risk. It's a gamble with your future. It threatens your future and your financial freedom, potentially leaving you unprepared for retirement or unexpected expenses. This guide will break down investing into simple, actionable steps, demystifying the process and empowering you to make informed decisions. By the end, you'll have the confidence to start your own investing journey and take control of your financial destiny. The best time to plant a tree was 20 years ago, when you first realized the importance of financial planning. The second best time is right now, today. Don't delay any longer. Don't let fear or confusion hold you back. Knowledge is power, and this guide will equip you with the tools you need to succeed. Investing is your ticket to financial security and freedom, paving the way for a comfortable retirement, pursuing your passions, and achieving your life goals. Let's make your money work for you, starting today, transforming it from a static resource into a dynamic engine for wealth creation. Ready? Let's get started on this exciting journey towards financial independence. Here's how to take those first crucial steps. Before we dive into the exciting world of investing, let's take a moment to equip ourselves with some essential knowledge. Let's learn the 5 key terms you absolutely need to know. These aren't just fancy words, they're the building blocks of your investment journey. Understanding them will empower you to make informed decisions and navigate the financial landscape with confidence. Portfolio. This is simply your collection of investments. Think of it as your financial garden, where you're planting seeds of different kinds: stocks, funds, crypto, bonds, real estate, commodities, whatever you own that has the potential to grow in value. It's all part of your portfolio. Index fund. A simple and effective way to own a slice of the whole market, or at least a significant portion of it. Like the S&P 500, which represents the 500 largest publicly traded companies in the United States. It gives you instant diversification. Don't put all your eggs in one basket, a classic piece of advice for a reason. Instead, spread your money across different investments across various sectors and asset classes. This helps to reduce risk. If one investment performs poorly, the others can help offset the losses. Risk tolerance. How comfortable are you with your investments and the inherent ups and downs that come with them? Are you okay with seeing your portfolio value going up and down, sometimes significantly? It's crucial to know your limits. Understanding your risk tolerance will guide your investment choices. Compound interest. The magic of earning interest not just on your initial investment but also on the interest you've already earned. This allows even small investments to turn into big wealth over time, thanks to the power of exponential growth. You don't need to master every single financial term out there. The world of finance can seem overwhelming at first. Just focus on these basics. Index funds and diversification are your best friends for starting out. They provide a solid foundation for your investment strategy. Risk tolerance keeps you from panicking when markets inevitably move. It helps you stay the course during turbulent times. And compound interest is why starting early matters so much. The sooner you start, the more time your money has to grow exponentially. These 5 words are your cheat codes for investing success. They're the keys to unlocking your financial potential. We'll dig deeper into each of these concepts in later chapters, but remember, keep it simple, especially when you're just starting out. Master these and you're already ahead of most beginners. You'll have a solid understanding of the fundamentals. Now, let's move on to setting your goals. Ready for the next step in your investment education? You need a destination before you start investing. Vague goals like "I want to be rich" don't work. Get specific. Define what you want, how much it costs, and when you need it. For example, save $50,000 for a house in 7 years. Match your investments to your timeline. Short-term goals need safer investments, long-term goals can handle more risk. Write down at least one short-term, one medium-term, and one long-term goal. Give each a price tag and a deadline. This clarity keeps you motivated and focused. Your goals are the foundation of your investment plan. Let's build that plan. With your goals set, it's time to make a plan. Start by figuring out how much you can invest, track your spending, and find money to put aside. Consistency is key. Set up automatic transfers to your investment account every month. Pay yourself first, invest before you spend on anything else. Choose a simple strategy most beginners do best with broad market index funds. Decide your asset allocation, how much in stocks, how much in bonds. Example, 90% in an S&P 500 index fund, 10% in an international fund. Review your plan once or twice a year, not every day. Rebalance if your allocation drifts. Buy low, sell high, keep your risk in check. Keep your plan simple and stick to it. Automation and discipline are your best tools. Your plan is your blueprint for building wealth. Now let's pick your investments. Time to choose your first investments. For most beginners, start with low-cost index funds or ETFs. Don't overthink it. Avoid picking individual stocks. Even pros struggle with that. Open a brokerage account. Think of it as a bank account for investments. Many platforms let you start with just a few dollars and buy fractional shares. A Roth IRA is a great first account for retirement savings. Search for a fund like VOO, Vanguard S&P 500 ETF, and place your first buy order. The key is to start. Your first investment is a simple transaction. Stick to your plan and add money regularly, no matter what the market is doing. Don't try to time the market, just keep buying. This is called dollar cost averaging, and it works. Consistency beats trying to predict the future. You're officially an investor now. Let's talk about diversification. In the world of investing, uncertainty is the only certainty. That's where diversification comes in. It's not just a buzzword, it's your shield against risk. Think of it as your financial bodyguard, protecting your investments from unforeseen market storms. Don't make the mistake of putting all your money in one company. It's like balancing your entire financial future on a single tightrope. Instead, spread it across different assets. Think of it as planting seeds in various gardens, ensuring that even if one garden faces a drought, the others will still flourish. Mix stocks and bonds for a smoother ride. Bonds act as an anchor, providing stability when the stock market becomes turbulent. Stocks for growth, bonds for stability. It's about finding the right balance between risk and reward. Young investors with time on their side can lean heavily on stocks. Those closer to retirement should add more bonds to safeguard their nest egg. Go global. Add international funds to protect against slowdowns in any one country. By investing globally, you're tapping into the growth potential of emerging markets and diversifying your risk across different economies. Diversify by company size too. Large, mid, and small cap stocks. Each category offers unique growth opportunities and risk profiles. The easiest way, a 3-fund portfolio. U.S. total stock market, international stock market, and U.S. bond market funds. These 3 funds provide broad exposure to the global economy. With just these, you own a piece of nearly every public company and bond worldwide. It's a simple yet powerful way to participate in global economic growth. Diversification is simple, low-cost, and powerful. It doesn't require a PhD in finance to understand and implement. You don't need dozens of funds, just a smart mix. A well-balanced portfolio is like a finely tuned engine working efficiently to achieve your financial goals. This approach protects you and grows your wealth over time. It's a long-term strategy that focuses on consistent growth rather than short-term gains. Don't chase complexity. Stick to what works. Simplicity and consistency are key to successful long-term investing. Diversification is your best defense. It's the cornerstone of a resilient and successful investment strategy. Keep it simple, keep it broad. The more diversified you are, the better positioned you'll be to weather any economic storm. Now, with your diversified portfolio in place, let's unlock the power of compounding. Compound interest is the secret to building real wealth. It's your money earning money, and then those earnings earning even more. The earlier you start, the more powerful compounding becomes. Example: Amy invests $300/month from age 25 to 35, then stops. Ben starts at 35 and invests $300/month until 65. Amy ends up with more money, even though she invested less, because her money had more time to grow. Time is your greatest asset. Even small amounts invested early can grow into a fortune. Don't interrupt compounding by pulling money out, let it grow. Reinvest dividends and gains to keep the snowball rolling. The longer you leave your investments alone, the bigger they get. Start now, no matter how little you have. Your future self will thank you. Compound interest is the most powerful force in finance. Let it work for you. Don't wait. Start today. Here's how to handle the tough times. The market will go up and down. Expect it. Drops are normal and part of the process. The worst thing you can do is panic and sell when prices fall. Selling locks in your losses. Staying invested lets you recover. Think of downturns as a sale. Stocks are cheaper. Keep buying even when it feels scary. Limit how often you check your portfolio. Once a quarter is enough. Focus on your long-term goals, not short-term noise. Stick to your plan and trust the process. History shows the market always recovers. Your patience will be rewarded. Control what you can, your savings, your consistency, your behavior. Don't let fear derail your future. You're almost an investing pro. You've learned the basics. Now it's time to act. Success isn't about genius, it's about discipline and time. Automate your investments, keep costs low, and diversify. Be patient. Wealth builds over decades, not days. Keep learning, but don't wait for perfection before starting. You know enough to open an account and buy your first index fund. Take the first step today. Set up an automatic transfer, even if it's just $25. Your first investment is a huge milestone. This is how you take control of your financial future. Stay consistent, and you'll be amazed at what you achieve. Your future self is counting on you. Start now, and let time do the rest. You've got this.